Well, I have some absolutely phenomenal news to share with all of you. 1,000 points. What if I were to tell you that the event's going down tomorrow, Wednesday the 17th, aka FOMC day, aka the day that the Fed finally starts to cut rates, aka the day that they turn that money printer back on and it goes absolutely BRRR, will be the start of a domino effect in which the overall market, the S&P 500, raises 1,000 points. Well, in this video, I'll be breaking down how that is all a very real possibility. But of course, before we get into all that fun stuff, if you haven't already, don't forget to like, subscribe, share this video with a friend. With that being said, let's ride. Alrighty, just to add a little bit of context and framework to this particular video, I want you to know that I'm filming it just as the market closed on Tuesday, September the 16th, and here was the official headline. S&P 500 eases a bit from record as traders wait big Fed rate decision. So of course we're getting into the rate decision and why I personally believe it's ultimately gonna prove to be a big win for the bulls, but also I think this is kind of underscoring like what actually happened today. We did hit a new all-time high. S&P 500, dingity ding ding ding, winner chicken dinner, new all-time high in the S&P 500, beautiful structure. Same thing in the Nasdaq. Technically the small cap sector didn't hit a new all-time high, but it's not that far away, and overall it is looking pretty strong. As I'm filming this as well, Bitcoin is looking like it actually wants to have a beautiful technical breakout, inverse shoulder, head shoulder, nice follow through on top of the EMAs, and like I said, I want to see this battle above 118,000. So in a nutshell, that's the context of the setup going into this big rate decision. And just so you know, we will be getting this at 2 p.m. tomorrow, Wednesday, September the 17th, right here. FOMC statement, economic projections, and the rate decision. And then 30 minutes after that, Jerome Powell, the chairman of the Fed, will be giving his public speech. As of this moment, we are very, very confident of a 25 bips rate cut. According to Polymarket, there's a 94% chance, and according to Kohrs, there's a 93% chance. So yeah, in a nutshell, the market is very confident of a 25 bips rate cut. But you might be thinking,
if the market is so confident about that, why are we expecting so much volatility? Why are there so many ants in people's pants about what in the world is going on?
Well, this meeting is going to prove to be a little bit strange. What to watch at the strangest Fed meeting in years. Consequential and contentious debates over the path ahead on rates are playing out under the glare of extraordinary political drama. So it's all going to come down to not only the SEP, the summary of economic projections, but it's also going to come down to the fact that we're probably going to have a couple dissenting votes. Going into this, yeah, the most recent vote, we did have a couple dissenting votes of like 2 of them were basically like, yeah, we want 25 bips, but the other 10 people were basically, hey, we're fine with what we're going on. Like there wasn't too much drama. This one, they're expecting a lot of drama. Right now, the meeting actually officially started today and it concludes tomorrow. Right now, the assumption is that there's going to be a lot of dissenting votes, a lot of, let's say, heated political discussion, heated economic discussion of the proper path forward. So that's what the market's going to react to. Not the fact that we're getting 25 bips. It's more of what's going to be happening later this year and really what's going to be happening at the start of next year. So even here on the Fed Watch Tool, 96% chance of a 25 bips rate cut. Where it gets exciting is what's happening in October, and more exciting is what is the Fed rate going to be at by the end of this year. As of this moment, there's a 70% chance that we're going to be 75 bips lower. We'll be at 3.5% instead of 4.25%. There's a little bit of a chance of 100 bips and even a decent chance of maybe only 50 bips. This is the interesting thing of where we're going to be at by the end of this calendar year, and also the drama related to the dissenting votes, which once again, I cannot stress this enough. There's gonna be some drama. Senate confirms Mr. Herein as a new Fed governor. He got confirmed just now, just in time to be voting in this FOMC meeting. The Senate voted to install one of President Trump's top economic advisors at the central bank, opening the door for him to cast a vote at this week's meeting to set interest rates. So the fact that we have a new guy on the block, something to consider. The fact that obviously he is loyal and a big supporter of Trump really is going to add to the drama of this entire spectacle. And on top of that, the Treasury Secretary had some of his own comments today. Mr. Bissent, Treasury Secretary Bissent, calls for a 150 to 175 bips Fed cuts. Even in this commentary today, he wants it coming down. We know Trump is calling for 300. Bissent is calling for about 150. But even with that, he did admit that this upcoming one, the results tomorrow, probably going to be a 25 bips rate cut. Scott Bissent says the Fed should do a series of rate cuts starting with 50. So even though that's what he wants, he also acknowledged the fact that it'll probably be 25 bips. And then we even got commentary from Trump today. Breaking, President Trump says the Fed needs to be independent. I think that's something that we can all agree with, but I would love to hear from you in a comment below. Do you believe right now they are independent, or do you think that there's maybe a little bit of, I guess, political shuffling in the background, if you will? Would love to hear from you in a comment below specific to this one. Bit of a strange comment. So now that you know a little bit more of the narrative setup, the story going into this, let's actually get into the nitty-gritty numbers, the stats, facts, and figures. Looking at the market today, it did a whole bunch of nothing. We had a pretty decent opening. It sold off. We bounced a little bit into close. You can see the market slightly red on the day. Bitcoin at this moment is looking pretty good. And in fact, the small cap sector had a pretty nice bounce. If you look at the entire S&P 500, it's a mixed bag. Yep, there was some green. Yep, there was some red. Looking at the entire New York Stock Exchange, you can see that the large players were selling. Once again, this is for the entire New York Stock Exchange. If we look at the options market, you can see that today we dumped at the open and then we kind of rallied, and then there was a little bit of a 0DT sell-off in the close. Looking at the Mag 7, there's actually a pretty decent pump. So across the board, we're getting a lot of mixed signals. Some of it's bullish, some of it's bearish, and if anything, I just think this really amplifies and exemplifies the unknown nature of what's going to play out tomorrow. And the final thing I want to show you is right here. This is the current open interest as the market closed for tomorrow's expiration. So this is basically tomorrow's 0 DTE contract. You can see that we have some interesting puts in play at 6,600, 6,590, and a little bit all the way down here at 6,500. But then on the positive side, the bullish side, there's a spike at 6,650 and a big spike at 6,700. So even that, it shows a very wide range, and really, once again, just shows the elevated nature of expectations and volatility going into this meeting tomorrow. And I should remind you, it's not just an FOMC meeting. Tomorrow, because we are in really the week of triple/quadruple witching, tomorrow, Wednesday, is the expiration for volatility contracts. So obviously that's just throwing a little bit of gasoline onto the fire. So here's the TLDR. Going into this, the expectation for volatility is very high, but the bulls or the bears, they're not really winning right now. We're getting kind of conflicting information, and really just to give you one final piece of just stats, facts, and figures, from a seasonality standpoint, this day historically is a bit bearish, but it's not a strong seasonality day. So just want to get that all out there. That's the stats, facts, and figures. So with that all in mind, with all that information on the table, you're now probably thinking to yourself,
hey man, you started this video off talking about 1,000-point gain in the S&P 500.
And I want to let you know, I didn't forget. I want you to know all the stats, facts, and figures of what's going on in terms of options, the setup, seasonality, what's going on with the narrative, why this particular event is so big. And now this is, I guess, what's the final act when you're a magician? The prestige, the final reveal. Check this out. According to JP Morgan, all the nerds over at that building did a big analysis on this, and they found something very interesting that I think is very extremely important to share with all of you. When the Fed cuts rates with the S&P 500 within 1% of its all-time high, which we just hit an all-time high, it results in an average return of 15% over the next 12 months. Furthermore, 1 month performance is more spotty, with stocks ending lower 50% of the time. History says near-term volatility after Wednesday's Fed rate cut will be a long-term buying opportunity. So basically, in the short term, expect a lot of craziness, a lot of pandemonium, a lot of chaos, a lot of up, a lot of down, kind of probably violently going nowhere. But in the next 12 months, this is, according to history, a phenomenal buying opportunity. If history repeats itself, the S&P 500 will hit 7,600 in September of 2026. And let me remind you, we are currently at 6,600, which means we might be looking at a beautiful 1,000-point gain in the next year. So what does this all mean? How can you actually use it in your own trading? Well, in the short term, for tomorrow, the remainder of the week, and probably the week after, honestly, we're just talking about September of 2025, it probably means stay on your toes. Stick to your trading plan. Don't get over leverage, and understand that there's going to be quite a bit of whipping around, both to the upside to the downside, and no one in the world can definitively tell you where things are going in the short term. But we already know overall the bulls do tend to dominate in the stock market in terms of longer term performance. But based on the current setup, the current metrics, especially when we're applying them to how these exact same setup has played out historically, well, it looks like the bulls might be having a very good year. As in terms of your favorite blue chip stocks, at some point, if you see that nice dip buy opportunity, I'm not at any point advocating chasing whatever all-time highs or something of that nature. But if you find a favorite blue chip stock that has a decent dip buy, well, at least according to history, it is suggesting that you should BTFD, buy the effing dip. Obviously, these are my own thoughts and opinions. I'm not your mom. I'm not in control of your money. So make sure you're making the best decisions for you and your account. And please be mindful of your risk. But I would love to hear from you in a comment below. Do you think that this is going to end up being an amazing bullish opportunity or more of a bearish opportunity? Like I said, I would love to hear from you in a comment below. That's what I have for you now. I'll catch you in the streams tomorrow. We'll have a market open stream, and also we'll stream the entire Fed event. It's going to be a very, very fun watch party. I hope to see you there. Thanks for all the good vibes. I'll catch you in the next one.
Peace.